Let's talk about dividend stocks. What you have to look for in this environment. We are going through a massive recession where 500,000 to 700,000 people are being laid off every month systematically by the big American corporations who are not in the growth stage anymore. They haven't been in the growth stage in years. Your growth is coming from smaller companies. But what do you do in terms of you want to play the dividend stocks? What do you look for? This is what you've got to do, folks. Very simple, and you can do it yourself. You've got to take a look at what the bottom line net income of the company is. What did they earn last year? What do they expect to earn this year? If they tell you they're going to earn $3 per share, you have to look at the number of shares outstanding. If the number of shares outstanding are 10 million at $3 per share, that would be $30 million in net income. Now you have to look at what are they paying out. If they're going to pay out 10 cents per share, 20 cents per share, you want to multiply that 20 cents by the number of shares that are outstanding. That tells you how many millions of dollars they're actually going to send out the door in a dividend. So you want to see how many millions they're going to send out in the form of dividends, and you want to compare that to the net income of the company. This is your percentage dividend payout. So in other words, is the company paying out 10% of their net income for dividends, 20%, 30%, 40%? If a company is paying out, let's say, 50% or less of their net income as dividends, it's sustainable. You know it's okay. But if you work out these numbers and you find out a company is paying out 85% of its net income in the form of dividends, then I can tell you you can expect that that dividend will be cut. And you don't want to go near a company like that. For years, companies that did this were companies like utilities. Utilities would pay out an enormous part of their income in the form of dividends. Some of them would actually borrow money at higher rates to pay out dividends, which to me is a form of insanity. So you just can't go by this company is yielding 7% or 5% or 6%. You have to know financially how strong is the company. Can it sustain the dividend? Then you can make a bet on the company by investing in it as to whether or not that dividend is substantial enough, if the company is healthy, to put a floor under the price of the stock. If you want to know more about this, then come visit the website, stocksatbottom.com. We've got lots of videos and we've got thousands of pages on narratives on teaching you on how to do this thing. And if you become a member, you share my proprietary list of stocks that we pick. And we've made money 11 years in a row. We are the only people in 2000, we've been around. We're the only people in 2000 that are on public record as saying that the market, the internet, would be destroyed in terms of stock market valuations, and it went down 95%. We were 30 days early with our call on the internet. Have a great day, and this is going to be a big year to make a lot of money. Good luck to you.